All right, I think we'll get started. Welcome everybody to the stablecoin payment landscape. This is our second edition of Spaces. I've been working with the team at Stabull to talk a little bit about the rapidly changing stablecoin market, which I think is actually going to be extremely important, and I think is uh, under underlooked at, misunderstood, doesn't get the attention it requires, especially amongst people who have been in crypto for a very long time. So I think these kind of conversations are really helpful. We've got the stable account up as well, who's going to be lurking in the background. Give them a follow if you want to learn more. I think especially in the coming months, they'll be one to watch. And before we jump into it, we're trying to dive deep on particular elements of this stablecoin ecosystem on a bi-weekly basis. So we'll be doing this every 2 weeks. I've been working with the team now for the last few months. I'm really excited about it. And today we're going to focus a bit on the stablecoin market outside of USD. Everybody thinks about USDC, USDT, and obviously there is quite a dominance, by the US dollar in the global economy. But I think that the global, macroeconomic situation is changing, and that aside, it's important that we explore other currencies. So we really wanted to dive in today on how local stable coins kind of fit into the overall landscape. How are they going to be used? Why are they important? And I think also even from an investor standpoint, why people should be paying attention to it. So before we jump into it, wanted to introduce two guests. We've got Matthew from Pharos joining us today, and Aaron from Brazil Crypto Report as well. So would be great if you guys could maybe start with a quick intro on yourself. So Matthew, why don't you go first?
Hello, this is Matthew. Hopefully everyone can hear me. If you can't, please let me know. I'm really happy to join. I'm based in New York. I was, like a lot of people in crypto, or some people, I started my career in TradFi. I was in payments for 15 plus years. American Express in the network, cross-border payments, treasury, MasterCard, mass payments, B2B, kind of anything you could imagine. 2018, I moved over to Ripple because Ripple is, use cases working on payments. Then I was at Stellar, again, L1, focusing on payments. And then I was in Circle's ecosystem for a while. And today I'm at an L1, pre-launch L1. I think our testnet's going live today. We'll work, and our use cases are RWA, payments, stablecoins. And this is really, really great talk. Appreciate everybody inviting me. Thank you.
Yeah, absolutely. Hey, shout out to Stellar. It was my second cryptocurrency I ever owned after Bitcoin. OG right there. So
Yeah, I think Jed McCaleb might be the most liquid crypto billionaire in the world, maybe.
I still believe he's Satoshi, but we'll not go into that whole trail of thoughts.
He's a cool guy to hang out with too, by the way.
Yeah, I've watched videos. Seems like it. Well, that's awesome. Great to have you today, and definitely looking forward to diving in. Aaron, would love to hear your background as well.
Hey guys, glad to be here. I haven't heard the Jed McCaleb as Satoshi theory, so I guess I'll add that to my list of rabbit holes to go down. But anyway, we should probably focus on the conversation at hand here. But yeah, so my name's Aaron. I've been in crypto kind of full time now since 2016, 17. Originally was a political journalist back in the pre-Trump era in Washington D.C. Ended up moving over to CoinDesk around like 2016, 17. Spent about 4 or 5 years at CoinDesk as a reporter, editor, producing Consensus and other big events. And then doing a couple other things for the last couple of years. But among those things has been a kind of a side project newsletter, podcast newsletter called Brazil Crypto Report that's trying to explore, we're trying to create like English language content about crypto adoption in Latin America. Just because I guess full disclosure, like my wife's Brazilian, I spend a lot of time here, and I just felt there's like a lot of there's a huge potential in this market, but not a lot of the kind of the Western quote unquote crypto world really pays attention to what's going on here. So I've been tracking this, the growth of crypto in this region now for about 3 years, both Brazil and elsewhere, and hopefully I can contribute some value to this conversation. But appreciate the invitation and glad to be here.
Yeah, for sure. And I think that, looking at Brazil as, one really powerful example of how stablecoins are being used locally, will be helpful, just so people understand just kind of like real world applications of this. So definitely want to dive in. But yeah, I mean, I feel like, that classic statement of, when years happen in weeks has kind of happened in the stablecoin um, industry. You've got news from, Mastercard, Visa, Stripe, Circle. It's kind of just like game on, and it went from everyone being slightly hesitant 6 months ago about sharing, their product roadmaps, to now we have to basically compete and beat each other to the punch, and have a bigger headline. So this is very good for anybody watching the stablecoin space. But yeah, Mastercard unveils end-to-end stablecoin transaction capabilities. Awesome. Visa launches stablecoin payments in Latin America, so they're a little bit behind, but hopefully we'll catch up soon. Stripe teases a new stablecoin product for non-US EU merchants, so still some work to do for Western countries, but obviously moving in the right direction. Bridge announced local on and off ramps in Mexico, and Circle announces the Circle payment network. So pretty, like steady stream of news over the last 2 weeks. Maybe while we're figuring out the tech issue with Fran, just to kind of set the tone for the discussion around local stablecoins. I mean, Aaron, could you touch a little bit on your experience in Brazil? How have people paid each other, used digital payments, over the say last 5 years, and then where do you think it's going with stablecoins?
Yeah, so Brazil's kind of interesting case because I think the traditional narrative for stable coins like doesn't really apply in some ways because you already have an instant payment system that's operated by the central bank called Pix. And I see some Brazilians in the audience here who can probably talk about that better than I could. But basically, it's like they've created this system that's been live for about 4 or 5 years now. Basically, makes it super easy to send money, instantaneously to people, just scanning a QR code. It's probably one of the most successful like fintech products like really ever developed. And it's had a pretty massive impact on providing financial services and payments to folks that didn't necessarily have access to that before. But what that means is that there's not like a huge just kind of day-to-day payments use case for stable coins in Brazil, right? Because it's basically free to send money back and forth via Pix. Like I could send you like 3 reais, which is like 40 cents, and it would for free, like just back and forth. You can buy a coconut from a guy on the side of the road for like 5 reais. Just send him a Pix, and
Are there
it's
small fees attached to it? How are they sustaining the network?
There's certain fees that I'm not like super familiar with how the fee structure, but for like very small transaction, like retail size transactions, there's basically no fees. Once you get up to the bank level and the larger financial institutions, there are some very small fees, but it's basically like a payment system as a public utility, right? If you can think about it that way, like the objective is not for this thing to make money. The objective is for this to make it really easy to send money around. Um, but what that means is that you don't necessarily have like the payments use case of stable coins for domestic payments, right? But for cross-border payments, that's another story. So if you look at the crypto volumes that we've seen out of Brazil, I mean, there has been some data that's kind of on and off published by the local tax authority here on on not just stable coins, but all crypto transactions in Brazil. And it's usually like 90% stable coins or 90 and like 85% of that is USDT, right? So who is using all this USDT? Like, well, you have a lot of cross-border transactions going to Asia, to other markets in the region. You have a lot of like people that are importing products, etc. If you break down some of the data that the Receita Federal, which is the tax authority, has been publishing. They'll actually kind of go into some granularity of like how many transactions took place, like what's the volume of these transactions. And I did the math like with I think maybe a year or so ago, I was looking at these transactions, and the average USDT transaction was like $20,000, right? Like 20,000 USDT. And in a country where like the average income is, monthly income is like 3 to 4 grand a month, like these aren't retail people making these transactions, right? So, so you have an interesting use case there. You do have an interesting use case with like USDC. They're trying to make a push by partnering with some of the big kind of like banks and asset managers, offering clients like Nubank, for example, is this huge digital bank in the region that has like 100 million clients. Really, also another phenomenally successful fintech product. But they're offering USDC now to clients, and I believe now you can actually earn like 4% APY on your USDC that you hold in Nubank. They announced that. I'm not sure if it's actually live yet, but they have announced that they're going to be doing that. So there is kind of this whole like dollarization as a use case, or like dollarization as a hedge against the local currency. Just as we are starting to experience some inflation here, things are getting more expensive. It's not like runaway out of control inflation, but it's enough to the point where people are kind of feeling the pain of it. Um, and Yeah, maybe I'll leave it at that. But I mean, happy to talk more about that, and happy to talk about some of what we're seeing in the other markets in Latin America as well.
Yeah, it makes sense. So definitely sounds like right now biggest use case is not necessarily retail everyday consumers, and they might not necessarily think about stable coins in kind of the immediate future, but in terms of the larger transactions, businesses, international, that's pretty significant. So I think we can definitely touch back on that. Fran, if we got you back, would be great to go back and cover off on some of the headlines.
Yeah, sure.
Okay, awesome. So I will ask you the hard question. Which one do you think is the most important? Which one matters the most amongst, everything, Visa, MasterCard, Stripe, et cetera, Circle? If you had to say, I guess like maybe for you personally, like which one are you excited about? But then maybe which one, what amongst all the headlines do you think is just more important for the stablecoin industry?
Right. Yeah. I mean, I'll delineate personal and business. I mean, on a personal level, we're watching the democratization of interest rates, or APY, that was largely exclusive to sovereigns and institutions and interdealer brokers and the whole shadowy euro bond market, in the Bretton Woods post-war era. So the central banks are the losers in this equation, and corporations and private companies are now able to create stable coins. The news I'm waiting for is coherent, non-aggressive legislation or regulation out of the US. There's supposed to be some kind of stablecoin act discussed or passed this week, but I always look at who's excited about these things. And when I see the world's largest companies, Google, Amazon, etc., and they're happy with it, I go, is this the best thing for humanity if these are the types that are bullish on this regulation? Is it just going to hinder innovation? And, I really need to read the actual act, but I don't think it's been fully published. Waiting for that part. Yeah, I mean, what's going on here is that trillions of dollars are moving out of the legacy space into the Web3 space. So money is now changing from, hesitate to say analog, but I'll use the analogy anyways. It's going from analog to digital in the sense of, in ones and zeros inside of a bank account to now smart contracts and tokens of various types. And that democratizes things because then the public can use it in various different ways. And there's a bajillion different use cases, right? The cross-border payments, remittance, etc. Like we just discussed, is at least in Brazil, $20,000 per transaction, if I heard that correctly, as an average. That's importers, exporters, businesses, whales, whatever. Whereas Bitso, the large Mexican exchange, they now represent 10% of all cross-border payments, remittance from America back into Mexico. That's huge, right? And this is forcing the Western unions of this world and legacy operators to become Web3 enabled and exploring new business models. And I just think that's a good thing at the end of the day for consumers. Also, in a super macro, you've got the entirety of stablecoins and real-world assets that are largely still decentralized in the sense that these tokens are freely transferable, mostly. Versus the complete other end of the scale, you've got Europe announcing that they're rolling out CBDCs by October, right? So there's this battle of centralization and decentralization that's occurring on a global level as the world's going through this kind of reset of sorts. And I think the sort of dynamic, the back and forth, ebb and flow between the state and the public, corporates and small businesses, and it's like a necessary kind of ebb and flow for this ecosystem to then end up with something that is homogenized as a middle ground that works in a safe way for every type of use case. At the end of the day, people just want to be able to move money quickly, safely, reliably, cheaply for business and personal reasons, wherever they are. And, if they can, it'll also be good to not have their purchasing power destroyed for the act of inflation, but that's a central banking consideration.
Yeah, it makes sense. I mean, I wanted to go to Matthew. You got experience working for, some of the titans in the industry. Some people might call them middlemen in some cases, which I don't want to like disparage your former employers, but
it's all good. It's all good.
so yeah, what's your take now that you're outside
Yeah.
that world?
Yeah, it's I've heard some really good comments from Fran and others. It's really interesting. So a couple things I would definitely agree with. So as someone who is on the front lines at both Ripple and Stellar, for lack of a better word, are selling their layer one payment stablecoin solution to banks and payment companies. And Fran is exactly right. I mean, I was at Ripple and we're selling to MoneyGram. We're trying to sell to Western Union. We're trying to sell to PayPal. We're trying to get them to use this blockchain technology for payment operations. And that's exactly kind of what we saw, which is there was from these older payment remittance companies and banks, there was this resistance to blockchain. And this is, several years ago. It's nice to see these older legacy payment banking operations kind of get on the bandwagon. But Fran was exactly right. That was one of the arguments that we would make, which is, Western Union and MoneyGram and even Wise and Stripe's built on Wells Fargo for the most part, and Chase, Chase CityLink. So these old Swift rails, they work well. But the fact of the matter is, these companies like Western Union and MoneyGram and Wise and these older companies, they've spent 20, 30 years optimizing their treasury operations and negotiating special deals with banks and getting all kinds of credit arrangements. So they have this very sophisticated treasury operation they spent 50 years optimizing, and it works really well. But what happens if you're a new entrant and you don't want to wait around that while and you want to kind of grow fast? And there's a lot of really interesting payment companies that are growing fast, and they're doing so by using blockchain technologies and using stable coins and things like that. So I was front row seat to that. And you're right. A company like Bitso, Ripple had a deep integration with Bitso. This is public. It's known. And Bitso combined with SPAY in Mexico was doing these kind of instant cross-border payments and displacing Swift. That was one of the things I was interested about the Circle announcement. Both Ripple and Circle don't really talk about this, but really what they're doing is they're challenging Swift and the interbank model itself. Which is actually really cool if you think about it. And eventually, hopefully, these cost savings and the benefits and expanding access to markets and growth will filter down to the consumer, where remittances are cheaper, sending payments to friends is cheaper, because the core infrastructure that the banks and the payment companies are using is now based on stablecoins. I personally was very excited to see Circle's announcement. Because that is actually emerging market stuff, right? They have all these emerging market payment companies that they've tied together for the last few years. And now they've kind of cobbled it all together, and now the core is the stablecoin infrastructure. So that's really cool, because that's actually bringing real benefit, in my opinion, to emerging markets from all over the world.
So, quick follow up, and I guess this applies to emerging markets, but really everywhere. Do you feel like Mastercard or Visa, Amex, et cetera, um, are now going to have like a much bigger responsibility in onboarding consumers in retail? You know, are they sort of the front ends that people are just used to, and that's what it's going to take to get mass use of stable coins, because the average person just doesn't want to open a crypto wallet or something like that.
Yeah. Yeah. No, I 100%. So it's, someone commented earlier that, stable coins for years, 2019, 2020, 2022, we're doing all this stuff. It's kind of this boring old man in the corner that no one really wanted to talk about. And now it's all anybody wants to talk about. And I'm both happy and a little jealous at the same time. It's kind of like, oh, I should have stayed working at MasterCard back in the day. Maybe I'd be in their stablecoin project right now. But the fact of the matter is, in my opinion, Visa, MasterCard, Apple with their card stuff, Stripe, these companies probably will do more for consumer adoption just by their movements than anybody else. Because you're right, it's like now I can, I have a stable coin in my wallet, I can use my card, I can get rewards. It's like everyday use. It's not just a treasury operation in the background that these companies are doing sophisticated integrations to replace Swift or do some sort of liquidity arrangement, but it's consumers can have real utility. And the fact of the matter is, in my opinion, a lot of the UI for some of these crypto wallets is still not very good. It's still too complicated. And I get into my Cash App, I go into Cash App, and it's really easy to use, and I can buy Bitcoin and I can do a bunch of stuff. And these consumer facing companies who understand UI and customer experience, like Pix, they're going to drive a lot of adoption, because at the end of the day, consumers just want something that's easy to use and makes sense, and they don't care if there's Bridge and Stripe in the background. They just want to see that it's in their wallet, it's easy to use, and it works. So I'm very bullish on what Visa and MasterCard are doing. I know that there's some thought about decentralization and democratization of finance and things like that, but they have good front ends, and that's what's, in my opinion, that's what a lot of consumers need. They just need ease and simplicity of use.
It's funny. As somebody who uses a lot of consumer apps, that's the first time someone's said to me that, like, banks and financial institutions have a really nice front end. But I think, relatively
So
speaking,
I will qualify that. I log into my Citibank account, I log into my Chase wallet, and it's not great. But it's in many ways better than MetaMask.
no, you're right. How sad is that? Yeah.
Yeah. So, I like to, it's funny, my friends at Stellar, I think, would agree with me. It's like, I want to see a crypto app that's as easy to use and as intuitive and as gamified as Uber. Like, that's, in my opinion, the gold standard of what a consumer facing app that's kind of useful and every day on the fly, you're on the street, you need a car. That's what, in my opinion, these look like. I don't have a Robinhood account, so I can't say how good their interface is, but I think it's probably pretty good as well.
Some of these companies have, obviously billions of dollars and many decades to perfect UX, UI, and customer onboarding pipeline, all of that fun stuff. The whole user journey, as they call it. I'm convinced that wallets like MetaMask, etc., will be replaced with a AI prompt interface over the next 12 to 18 months. So instead of, yes, you'll still have your Cash App and, with the added services and the UX and everything else. But I think we're moving to a space where you just get a chat interface, and it's like, what's my balances? What payments have I got due? Show me the interest rates available to me at this time, or even as crazy as show me 10 risk reward setups with stop loss on a 1 hour intraday scalp trading setup visualized as a chart, and it's like, boom, here you go, these 10 trade setups. So that's a big factor that's going to change the landscape. But on the MasterCard, Visa stuff, I think their value lies in the off ramps because the merchants don't necessarily accept cryptos directly, right, for FX volatility and other considerations. So what I'm seeing is that the deals being cut by the credit card companies are with neobanks that are Web3 enabled, and then you deposit your USDT, USDC, Bitcoin, whatever, to the neobank, but you have a physical MasterCard or a physical whatever, Visa, Amex, and then you swipe it and the merchant doesn't need to know that they deducted your stablecoin as collateral or Bitcoin as collateral. The merchant still gets dollars in their account like normal on a daily, weekly, whatever frequency.
And I'll just chime in here as well. I was actually at Web Summit Rio last week, and there were at least 3 different like crypto card product announcements. Maybe there might have been more. Like there was just so many of them that I couldn't like keep track of them. But let's say crypto.com announced a crypto card that they're deploying in Brazil that has like an interesting kind of self-custody feature, like MetaMask, the MetaMask card. They're launching in Brazil. There's another one that from Gnosis Pay with a local company here. So this seems to be, at least for this particular event, like this was kind of all the Bybit also had a card, like a Bybit Pay type of announcement that they're rolling out here. So what I think is interesting about these types of cards is that there's actually, like, I guess the concept of like a credit card that you can spend crypto with maybe isn't the most exciting thing in the world, but like there are a different, like I was surprised at like how many different types of like the differentiation of these products, right? So like some of the, like with the MetaMask card, it's like you're basically just spending like directly, out of your MetaMask account. Like that's, or whatever crypto you have in your MetaMask, you're just spending it directly out of there. So you're self-custodying all your coins, like whatever. With some of the the cards being issued by the bigger players, it's it's more of like, okay, you're holding your crypto on Bybit or something and you're just spending it via this card. So there's different ranges of products available for people depending on the risk profile. Like if some people are like really into self-custody, not your keys, not your coins, like okay, you can do that and you can still spend. And other people are more like, I trust the bank more than I trust myself to like not lose my keys, then okay, great. Like there's a product for you too. Um, and so and I guess the thing with Brazil specifically, there's credit card terminals everywhere. Like you'll have there are these things that are pretty much ubiquitous. Like you don't really need cash at all in Brazil. You can you can pay with Pix, you can pay with credit cards. Like even the guys that are even like the homeless guys that come ask you for money will like have credit card readers. There's kind of a whole backstory behind that we don't have to get into, but like these things are basically given out for free to. There's a huge competition, huge kind of like race to the bottom of between credit card, machine issuers back in the day, a couple of years ago, where they're just going around like giving these terminals out for free to merchants. So basically everybody has these things, right? So, so it's quite interesting to see just the like all these different card products coming to market right now in this particular jurisdiction anyway.
So, I mean, kind of touching on that and a little bit on USD versus local stable coins. Um, you know, do you feel like de-dollarization is going to continue? Do you think that dollarization will become more dominant? Thinking about like not the retail or the business user in Brazil, but I guess the local individual. Do any of these technologies advancing lead you to believe that there's going to be consolidation of currencies versus going the other direction?
Well, what I would say is that, anybody in Brazil who is, we'll say like upper middle class to upper class is thinking about how to get their assets out of the country or how to get their assets like out of the reach of the
Yep.
the government. Um, so I mean, there's multiple ways you can do that. Crypto is one among many different ways that you can do that. Um, so I think among those classes of people, the dollarized stable coins are a pretty good option. Like I don't know if you're trying to get your assets out of the country, you probably don't want to be holding them and holding a bunch of stables in your new bank account, or in your Itaú account. That's probably not a good idea, but that is just a trend that we've been seeing a lot, especially over the last like 2 years with the current government, which is unfortunately the fiscal situation has kind of declined quite a bit here.
Yeah, there. If I can ask you a question, so with the socialists driving capital flight, is there any hints of capital controls coming in, like China has for avoiding mass capital flight?
Well, yeah. Not in a non-traditional sense. So the central bank here, they've actually they're in the process of issuing a regulatory framework for cryptocurrencies, and both VASPs as well as stable coins, and they're trying to regulate stable coins essentially as FX. And one of the proposals that they're trying to implement, it looks like they will be successful in implementing this despite a lot of industry opposition, is actually a ban on transferring stable coins from a VASP, like, or a brokerage regulated exchange, to an unhosted wallet. So
Jeez.
so if you're transferring your if you're trying to transfer USDT from Binance or Mercado Bitcoin to your MetaMask, like that would not be permitted, or you have to be on some kind of white list or whatnot. But they're trying to ban those types of transactions, and I think a lot of it is partly due to this capital flight risk. I mean, I think these I mean, the people that work at the central bank, the guys doing this, are like, they're not dummies, right? Like they know how this stuff works. And they've been around, they've been through all these capital flight crises over the years. And I think I think they are like pretty worried that there's I mean, I think part of it is, I mean, they say it's more of like we got to contain, money laundering and all this kind of stuff, but I think it is more of like an actual capital flight issue. Um, as far as I
And
know, like
it's
this is
interesting
actually
because this technology allows for a special type of tyranny to exist, a total sort of digital clampdown, full analytics and AI and all the rest. But at the end of the day, particularly Bitcoin, self-custody, you can avoid that unless you're stuck with value, money, etc., in a broker or third-party accounts. And then these laws come in, and then you basically have to ask for permission to move your own money at any given time, which is only going to increase capital flights and make central banks less popular than they already are, sort of thing, right?
And as far as I know, this is the only instance anywhere in the world right now where this type of stablecoin transfer prohibition is being actively considered, or like even likely to be implemented. I guess I'd be curious if other folks know of other examples of that, but I haven't seen one.
I've got a huge
Um,
example for you, and I really wanted to bring this subject up, right? So the stablecoin RWA industry is talking about all this great stuff, use cases, payments, remittance, etc., funding, investments, infrastructure. Not once do I hear from the regular crypto press or, socials about the multi-trillion-dollar elephant in the room, which is the digital yuan, which is live with, I think, 17 countries now. Manufacturing and export behemoths like Malaysia and Vietnam and others are signing up to use this sort of like a federated hybrid model. It's not a full CBDC. It's not freely transferable. It does have permissions. It can have regional banks kind of mint supply and stuff like that. But in terms of the reason they built it is because of sanctions and the unworkability with SWIFT and the IMF and the BIS, who all now have alternatives, right? Like there's even an alternative to the UN. It's called the Shanghai Cooperation Organization. In my opinion, it should probably be renamed. But what do you guys think with the eastern part of the world is already live with multi-billion, blockchain-based payment in a quasi-stable called the digital yuan? Is it on your radar? Is there any thoughts?
it's something, I mean, it's something I've known about for a long time. I guess like China in that part of the world is just such a black box for me, where it's like you just never know what's actually going on, or versus what they're saying. Is it true, or is it just propaganda, or like what's actually happening?
Sure.
So I don't like, it's something I've been like kind of loosely following over the years, but I think I've always just been kind of looking at that as like, okay, that's the model of what we don't want to do. You know, like
So
we can
it's
stay as far away from that as possible. Like, you know, we'll be in good shape.
so
Yeah.
so this is Matt. So a couple, it's really interesting. I'm learning a lot here, which is very cool. So a couple of things. I do believe it's interesting you brought up Swift, and I agree. I do think if we fast forward 20 years, I think that you know, we may look back at kind of weaponizing Swift and politicizing the BIS and seizing foreign reserves. I think that in 20 years from now, we'll look back and be like, maybe we shouldn't have done that. You know, that's my opinion. We'll see. But as someone, Pharos is actually is an Asian based blockchain, is a blockchain I'm currently at, and that, you know, have the founders are Chinese and things like this. And it's interesting. It's funny with the digital yuan. I can absolutely see import export, large businesses in China really taking advantage of that with their networks in Asia. In terms of consumer, you know, I'm not, but I can absolutely see that because you know, there are all the currency controls, and they do have kind of capital access problems because of the currency controls and the kind of things that, you know, the communist government is doing. But in my experience too, I mean, the Chinese consumers love Tether. I mean, you know, I did a lot of stuff in Circle's ecosystem back in the day, and we always were able to do lots of business with Circle and USDC when it came to the Americas, when it came to Europe. But Africa and Asia, it was like, if you don't have Tether, we can't talk to you. Even with the concerns about Tether's reserves and all this kind of stuff, it was like,
It's
you know, we're in China, we can't touch USDC at all, and we don't want to because it leads us open to being prosecuted by the government. So they were really in on Tether, which I thought was kind of interesting.
it's to do with counterparty risk and the way that both of them are set up, and
Yeah,
the Chinese would just simply have the unpalatable risk
yeah,
exposure to using USDC. And back to your point, 20 years, I think 5 tops, and
yeah.
and I think, and I think that we're not going to like say how did we allow them to politicize and weaponize. We're going to say how did we allow the central banks to then take those international institutions and do what they did. I think what will trigger it all, and I'm absolutely convinced, is within the next 24 months, we're going to get a audit of the Federal Reserve. And it's going to really upheaval our entire history of money, and will be the trigger for mass change on the sort of global architecture level. I think it's already underway. I think, you know, various governments and their intelligence agencies have known for a long time the not so nice things that central banks have done, and this is why the Chinese yuan or the digital yuan is a viable alternative to some major industries, particularly import, export, cross-border payments, etc. Between these new alliances, these new trade agreements that are emerging. As the world kind of restructures away from the liberal world order to some sort of multipolar order. And so we'll probably end up with a few big blockchains that specialize in certain things, interbank or payments or whatever. And then you'll have different hemispheres that try out different solutions, you know, from a totally centralized level in Europe and parts of China, Asia, etc., to a more decentralized West. I really don't want to see the brutality of VASPs and the compliance requirements of VASP holders that limit, you know, startups to disrupt coming into the Commonwealth and U.S., America,
I mean,
Mexico, etc.
to your point, I mean, a lot of people out there believe that the MiCA regulations in Europe are going to kill their ability to compete in this stablecoin arena. I
And
mean,
it's designed to do exactly that. It's a protective measure for the incumbents. That's all it is. It's exactly like I'll give you a quick analogy, right? So I live in El Salvador. I moved here 2 years ago with my wife because of the Bitcoin standards and, the insanity that was going on in New Zealand at the time. And it's an interesting dynamic because while we have these wonderful securities laws, digital asset laws, Bitcoin laws, etc., and you can forget about the whole scuffle with the IMF recently and all the rest, it's largely irrelevant in my opinion. If you want a loan for property development or something, you can't deposit more than $25 million into a bank from an offshore entity, and it's subject to a random 6-month freeze. So if you're funding a $200 million development, you have to spread it across multiple banks. And the reason they do that is because they want you to borrow from them directly. And they're charging, if you're lucky, 12%, most of the time 17, 18. Tether comes along, and it's like, hey, we can do loans for 5%. And the government had to step in, lobbied by the banks to basically say, do not offer anything below 8%. You'll kill the local banks. So there's still that kind of like the dinosaurs are fighting to stay alive. You know what I mean?
Yeah. Yeah.
I mean, to that point, kind of a spicy question. Is there less money to be made in the money transfer business now? There's more transparency, there's more competition. The tech is getting better, the UX is getting better. Has there been resistance to all of this because, you know, there was more opportunity to extract from transactions before, and maybe that's going away, or is the opportunity actually bigger and the pie can grow? Are we pessimistic or optimistic?
I'm a pessimistic optimist.
I,
I think things get worse and then they get a whole lot better. I think the pie's growing and the margins are squeezing, but I'll hand it to someone
yes.
else.
Yeah, I would agree with that. The pie is growing, but I mean, you look at these like online brokerages where you can buy, stocks, bonds, etc., and go into your app. I mean, back in the day, 25 years ago, this was all through phone. FX was traded through phone and fax and stuff, and FX margins have been squeezed. Financial asset margins have been squeezed as the tech becomes more available. So I would agree with that the margins are being squeezed, but the maybe the pie is growing larger.
Yeah, I would agree with that. I mean, I think it's a bit more distributed, which is good, I think, for the average individual. On a lighter note, moving away from like governments crumbling and people having to hoard Bitcoin and guns and live in a castle. What about like credit card miles and like rewards programs? Do those all die? Are the alternatives that people will be presented with, which is good APY and stuff like that, going to just decimate loyalty programs?
Well, I think with the MetaMask card that I was talking about earlier, and I guess I don't understand this entirely, so I don't want to, I don't want to say something inaccurate, but like from what they were telling me, the MetaMask team, they're actually building in some interesting. They're kind of like open sourcing the loyalty aspect of the product almost. So like, if you have a if you have a cryptocurrency and people are paying with your cryptocurrency via the MetaMask card, like you can kind of build in your own type of like cash back like into that almost. So they're it's not just like, okay, you're receiving only cash back in this one shitcoin that the wallet that is issued by the wallet holder or the card holder, whatever. But they're kind of like open sourcing the loyalty component. Which granted, I don't understand it super well, so I'm probably not explaining it very well. But like, I thought the idea was really interesting because that's a big thing for me, where it's like, it's like, look, like I travel a fair amount, like I want to get my Delta miles so I can get my airport lounge access and all this stuff. And I know it sounds, whatever, petty or trivial, whatever, but like, or elitist perhaps. But it's like, look, like that's a big motivator for how people decide to spend is like, I want to get something back for this.
Well, flying is so miserable, so I totally understand. I mean,
yeah, I mean, it's like it does help, like just the airport lounge experience, right? So it's like this is something that like drives decisions around, or people's decisions about how they're going to make payments. Is like, am I going to get some sort of compensation for this, right? Versus nothing.
I just booked
So
a flight to London and back, and the taxes were more than the flight itself when you get the breakdown in the invoice. So I definitely want something back, at least some lounge access, right?
I had that happen too when I flew to the UK. It was the most insane thing. I had to call the airline and check that it was right. There's just this weird international tax that they charge, so won't be vacationing there anytime soon. But yeah, no, I think it's probably going to be a yes and, which is going to be you get APR, plus the various companies like Marriott, et cetera, will incentivize you to be loyal, and perhaps we'll even see points programs go on chain finally, and then I can trade my unneeded points to other people. So that'll be pretty exciting. Um,
There's actually companies that are actually, just to interject, there's companies kind of doing that, which are really cool. There's a company out of Africa called Phone Bank, which is slightly different, which is they're taking all of your unused minutes on the prepaid calling platforms, and which is in some ways kind of a loyalty point or a credit, and kind of you're trading that in via blockchain into other assets. So I think it's a really exciting area. I'm not an expert on loyalty point systems, but I think there's a lot of opportunity there, and I'm pretty excited about you being able to trade your assets and turn it into other things and create liquidity on point systems, which are kind of in a lock garden.
Very true. Although I could see us now getting taxed on those points as well at some
I
point,
think, yeah,
because it's income now, right? I hope not, or at least an asset. Um, Aaron, I wanted to throw it to you. There's a concept of a stablecoin sandwich, which you might be familiar with. Curious if you can kind of explain that, and why it might be relevant outside of Brazil as well.
Yeah, yeah, absolutely. So, yeah, I recorded an episode on the podcast episode on this a month or so ago, actually. So the idea is that like if you're doing forex or foreign currency transaction between like two relatively unliquid soft currencies, like if you're going from Brazilian real to Argentine peso, like these are not like super liquid currencies. So if you that for that swap, you're not going to be getting necessarily the best price. Um, but if you're able to go from Brazilian real into USDT, or some other USD peg stablecoin, and then from that USD peg stablecoin into Argentine peso, like you'll actually end up getting a better rate, because there's more liquidity for the Argentine peso and USD stablecoin, and then the USD and Brazil stablecoin for both those respective pairs, much more liquid. And then you're also getting that transaction like settled much quicker, especially if you're on ramping in via like a like a locally pegged stable coin, like a Brazilian real pegged stable coin. Now we were kind of talking about this earlier, the idea of like non-USD local market stable coins. So it's this concept that you've been kind of hearing a bit more lately. I think it was like some guy at Fireblocks that like coined the term stablecoin sandwich. I guess it's maybe like the term of the year in crypto, right? I guess, or maybe at least claimed credit for this, for coining this term. But you're seeing quite a bit of adoption. A lot of companies that are like really kind of embracing this, and it does seem to be really working, and it does seem to be does seem to be a lot of volume that we're seeing running through some of these. Like I was interviewing this company called Sphere Pay, or Sphere is the name of the company, and they have this product called Sphere Pay, and these guys have been doing like several billions of dollars in volume in Latin America using these stablecoin sandwich techniques. So this is definitely something that I think you need to be paying attention to if you're in this kind of stablecoin cross-border payment space.
Yeah, I mean, maybe that's a segue, Fran, for you to talk about the latest with Stable, and maybe how if you're on sort of the trading side, investing side, how this concept might apply, how you could leverage it, using Stable to uh, to earn yield.
Yeah, sure. So, look, the reason we put stable together is that we realized the asset class of foreign currencies and commodities does not have dedicated, optimized infrastructure. So we built a specifically optimized for FX and commodities AMM. It's a dynamic sliding oracle solution that is far more capital efficient, avoiding the sort of stale capital problem of people putting tens of millions in liquidity and not having any APY or not giving the APY they should from providing liquidity and all the rest. So Stabull is decentralized exchange operated as Stabull Labs out of Prospera, Special Economic Zone. And there's only two things you can ever do on Stabull, really. One, swap one asset to another, whether it's, I don't know, tokenized gold to Swiss francs once we load that up, or JPY to NZD, etc. Or dust off your assets, add them as liquidity, and be rewarded with an interest rate. Totally self-custodial, decentralized. But obviously, it's as the whole world transitions from the legacy into dealer brokers and central banks and everything else, and Swift in particular, it's expressed as tokens on chain. And Stabull is just simply bedrock infrastructure that allows the most capital efficient swap or staking from one asset to another. So we're just wrapping up a public sale with a governance token where people can vote on which pools have how much APY to create some competition between market participants once a quarter. And we're going to be listing on Probit on the 19th and MEXC on the 2nd of June, and then stepping up to larger exchanges from there. But the roadmap's very simple. We're just going to integrate more chains, add more pools as more assets and more issuers come online and more LPs, want to jump in the pool. All these neobanks that we've been talking about, we've just completed some decentralized aggregator reverse integrations, like Paraswap, Paragon, sorry. And whenever we're the cheapest, the orders should route through to us. But the user doesn't really need to know. It's stable in the background. So if one of these neobanks integrates our router, they can quickly expand the range of stablecoins, non-USD, and commodities as increase their product service to their clients, and they can add a 0.5%, whatever retail fee on top, and turn this into a new revenue stream. So we're seeing some appetite from neobanks to expand products and expand revenues. Because at the end of the day, while revenues compress, look at the best example, I guess, is Western Union. They used to charge 40+% for America to Mexico as a corridor. Now Bitso is offering dirt cheap, instant, transfers cross country. So it's all about velocity of money. They need to add more products. Do you want stocks? Do you want FX? Do you want this? Do you want that? Do you want savings? Do you want mortgages, lending, etc.? The Revoluts and the various different cash apps of this world have to incentivize more velocity of money because their fees are compressing. As Stabull, we don't really need to worry about that. We just simply focus on having a secure, clean, simple user interface and swap facility so you can just transmute one asset into another in a self-custodial way. Kind of surprised that nobody's built an optimized solution for FX and commodities yet, but we have been working on this for 3 years, and the market's only really maturing now. We've delayed launching for about 9+ months because the markets last year weren't quite there, and now everybody's talking about stablecoins and RWAs.
Yeah, and I mean, just for the kind of like-minded crypto trader, investor, etc. Obviously, there are lots of decentralized exchanges.
Sorry, you dropped off there.
Oh shoot! Can everyone else hear me or no? Am I muted? Give me a thumbs up. Uh-oh.
No, you're good. We hear you.
Okay, cool. Yeah, so there are obviously a lot of places to swap tokens. The thing is Stabull is focused, right? It's focused, which means better UX and also lower fees. And so if you are thinking about, putting significant amounts of money into stables, RWAs, earning passive yield, you don't want to kind of eat into your liquidity through paying these fees. So that's why I've been watching Stabull very closely. I recommend people basically add it to their palette of places to swap in the future and earn yield. And so appreciate you, Fran, for kind of just sharing updates on where you guys are at, and excited to see some of the rollouts. Before we wrap up, just kind of wanted to give our guests a chance to plug anything or just kind of share what you guys want people to pay attention to. So Matthew, if there's anything you want to point people to, go for it.
Oh yeah, so I'm at Pharos. It's an L1 EVM L1 project, another L1. We are launching soon, testnet in the next couple of days. We are targeting institutional use cases, but the cool thing is that we're building a DeFi stack, so retail users can kind of access these assets, and it's pretty cool. These are yield bearing, revenue yield bearing assets. They're not based on treasuries or other kinds of U.S. debt. These are actually green energy projects in China and the Middle East. So you have power charging stations and things like that, which is kind of cool. This is a way for and this is backed by Ant Group, and this is a way for kind of Ant Group to open up their asset base, call it power charging stations, to people outside of China because of capital controls. Still a long way to go. It's it's a lot of work, but I'm pretty excited. And stay tuned. You can follow us on Twitter, and we'll have announcements over time. But this has been a really great conversation. I really appreciate it, and I've learned a great deal. So I want to thank you.
Yeah, appreciate you being here as well. Aaron, over to you.
Yeah, really appreciate the conversation as well. It's Fran, I feel like we met in at Consensus 2018 or something. Like way back in I feel like I know this guy from someplace, but I can't put my finger on where. But
Well,
anyway,
you know how messy the post events were back then.
yeah, exactly. Yeah, it was definitely the Wild West, right? But yeah, I mean, kind of the way I sum up thinking about stable coins right now is I mean, honestly, if you'd have came to me in like 2017 when I was first getting into crypto, and if you'd have said like, hey, Aaron, like by mid-year 2025, the most exciting use case in crypto will be stable coins, I probably would have been like pretty underwhelmed, to be perfectly honest. That being said, I think it's really exciting that we're at this point where like the narrative has finally caught up with the technology, right? Because stable coins are like these are not like new things, right? They've been around for, I mean, Tether's been around since what, like 2017, 2016. I mean, it's been around a long time. USDC has been around since 2018, 2018, 19-ish. And they're not like super complex products either, right? So it's not like there's something like super technologically innovative about these that we didn't have. Like there's not anything like technologically new that we have now that we didn't have before. But just when you're looking at kind of the stack of different like different people, different companies building out ways to make these things more usable, I think that's where we're getting a lot of the information or the innovation coming from. And I think that's really exciting because there are a lot of, you're getting a lot of people coming in from like the payments world, from the TradFi world, from the product world that are realizing like, okay, like this is interesting meta, that this is probably going to be the future of how payments are made generally. And especially in kind of the cross-border landscape, probably in domestic use cases as well, depending on the region. But I think it's really interesting to have like you have so much attention devoted to this particular tech stack now that needs to be really made easy to use. And I feel like, I mean, even if you go to like any random bank today in the US or like anywhere and you say like, hey, like, can I deposit stable coins? Like, can I deposit USDC? They'll probably just look at you like you're crazy, right? And they either won't even know what that is, or they'll be like, oh, I've heard of this, but like we can't really, sorry, we can't accept that right now. And I think two things really need to happen to like push adoption here, at least on more of like a retail level. Like there needs to be demand for it, right? Like banks aren't going to necessarily just roll out these solutions, invest a bunch into modifying their tech stack and stuff just because one guy shows up and he's like, hey, I want to deposit 10,000 USDC. And like he's complaining because like you don't have that capacity. It's like, well, okay, like whatever, what are you gonna do? But there's got to be like enough demand for this from consumers and from businesses to accept these payments and like use these and be able to like bank with these type of like have these integrations with the traditional banking system with these technologies. And then there just has to be an easy enough way where, and I feel like there's a lot of innovation happening on this front right now. So, but there has to be a way for businesses and banks to just like easily accept these things, right? So it's like, hey, do you accept USDC? Sure, no problem. Like, whether you're a merchant, whether you're a bank, like whatever, it's like, sure, no problem, I can accept that. I may not like hold that on my balance sheet, may just swap it out into, just like I'm accepting a regular crypto payment through one of these, just swap from the crypto to the fiat version of the money. But I just think those things really need to happen for this to have any meaningful. I guess like the question that I've been wrestling with is like, do stablecoins does this end up just kind of being like a B2B kind of like FX play where it drives a lot of volume, or it drives a lot of there's a lot of interest from these big players who are just doing huge volumes where saving like a handful of basis points in every transaction is real money, versus like for me, like I live in South America. I have a US bank account. I send money, via Wise to like my new bank account. If I send like $1,000, I pay like a $4 transaction fee or something. And honestly, if you were to come to me and be like, hey, I've got this like cool new solution that you can send that $1,000 and pay a $3 transaction fee, like you want to try it out, I'd probably be like, I don't really care that much, to be honest. Like $1 for it's just not really to move the needle for me.
I think it's less about trading and speculating and saving a penny here and there, more about just sheer utility of what stablecoins allow for.
Yeah, I agree. But I'm just saying, like, for me, speaking as a consumer, if somebody came to me with that type of solution, it would be like, okay, that's not like that much better than what I have currently. So I'm kind of curious. The way I'm thinking about it is like, how does this end up being just more of like a B2B, like kind of FX, like just big volumes game, or or do these things provide enough? Can we get to the point where these things provide enough value to consumers, to like retail consumers, to really be adopted at that level? And I think that's kind of the main kind of trend I'm looking out for, is to what extent does this stuff get adopted by retail in like a meaningful way. So and then I guess one sort of shameless plug before I sign off, but Fran, I heard you mention that you guys are based in Prospera. I actually have a podcast recording coming out tomorrow about Prospera. So shameless plug of my podcast here. So yeah, I interviewed Nicholas from Infinita, which is kind of part of
Infinita, yeah.
So
I call that a layer two. Prospera is the real estate and the special economic zone. Infinita is like the layer two incubator, accelerator, pop-up cities.
Yeah, it's a helpful way of of thinking about the differentiations there, because initially I was confused. I was like, what are all these things? I don't understand. But anyway, so yeah, I got an episode coming on Prospera tomorrow or Friday. So shameless plug there, but check it out. And thanks for having me.
No,
Appreciate it.
Absolutely appreciate it as well. Only takeaway from your anecdote is that I don't ever want to be the guy walking into a bank. I don't ever have to walk into a physical building to do anything with my money. That is a huge perk, in addition to not having to wait to move it and get it and all these things. But I think there's a lot of work to do still for like the average consumer to care enough, right, to change things. And I hope we see it sooner than later. Well, amazing. Thank you everybody for joining. Shout out to Fran for co-hosting with me. Aaron and Matthew, I know I had to drop off, for joining us today. We'll likely do one of these again in the next 2 weeks and kind of dive into another topic. Do check out Stabull, give them a follow, start playing with the application as it is today. Lots more rollouts coming, and appreciate that team for working with me and making me an insider, if you will, in terms of like seeing all the stuff that they're working on. I've been very impressed with it, and look forward to sharing more information on my side as well. So with that, thanks for listening live. Thanks for anybody who listens to this in the future on the recording, and have a great rest of your week. Take care.
Thanks, Boyd. Thanks, everyone. Take care.
Cheers, everyone.